Well, Finance Ministry in its monthly economic report, which was released yesterday, comments on the inflation trajectory in India. It says that inflation trajectory in the coming months will be impacted by more geopolitical situation due to the war, and this is going to have a direct impact on the supply chain and commodity prices in the country. But however, the country is better placed than most to fight this storm, they say, to weather this storm and achieve growth close to 8% by in this fiscal year. In fact, the monthly economic report also mentions that evidence on consumption patterns further suggests that inflation in India has a lesser impact on the low income strata when compared to the high income strata. Further, it suggests that keeping in mind that the demand is now slowly recovering, there are very low chances if inflation is going to further hike, especially by a higher margin. Now, Cpi Inflation, which is also the consumer price index, was released yesterday, and that has come to close to 8%, which is seen as the highest in last 8 years on an average. The government has said that this is also because of the rising fuel prices, which has been evident in past few months across the globe. Now, the monthly economic report suggests that if we do not have to consider the external factors, that is not withstanding the turbulence that has been associated with the monetary tightening in advanced economies, or the China lockdown, or the disrupted supply chains, and of course the geopolitical situations in terms of the Russia-Ukraine war, India is actually relatively at a better place compared to most, and it is in a place where it can also weather the storm and achieve its dedicated steady growth during the current fiscal year. Now, post the budget, RBI also had set its economic GDP growth targets for India, and for FY23 it sees the growth rate to be at 7.2%, while IMF, which is the International Monetary Fund, in its latest World Economic Report projected growth at about 8.2%. However, Finance Secretary yesterday mentioned that in case RBI decides to go for a further hike in its interest rate in its upcoming MPC meeting, which is going to be likely in June, then that is going to have an impact on the growth rate targets that the government has set.
If you like the video, do like, comment, share and subscribe.